been a choppy week so far in this week for the market. So what I'm going to do for this edition of the most interesting chart of the week is to kind of show you guys why I think that could continue, and then more importantly, what I am planning on doing about it. And this is one of those places where I think there is a little bit of room for some discretion when it comes to trading systems, which again, at StatsEdge Trading, we are systems traders. So members of StatsEdge Trading on the weekend are going to get an email and say, here is all of the stocks that have met the criteria of our different systems with entry prices, exit prices, stop losses, all of that. Then they come on into the room where they can be alerted real time. We talk about, the trades we're making, that kind of thing. It's a really cool community that's getting built up there. So if you're interested in that, again, go to StatsEdgeTrading.com. You can see right above my nugget here and give that a shot. Now, we're running different systems. That's kind of the idea behind this, is we want to run some momentum systems, some pullback systems, some mean reversion systems, right? Day trading, swing trading, investing. The idea that I have and what's really helped me out in the long run trading is not just being someone who, I look for this particular pattern and then I buy that. You can certainly do fine by doing things like that. But the more diversification across systems, it means when system A is struggling, maybe system B is taking up the slack, and so on and so forth. And one of the things that I like to do in order to make sure that I'm kind of focused on the right thing is try to figure out, is this an environment that's going to be a very trend-filled environment, or is this an environment that's going to be a little bit choppy? And which system can I lean on a little bit more to make sure I'm taking advantage, again, of that trend-filled environment or potentially this choppy environment? And I think that this chop that we've seen this week could potentially continue going forward. I'm going to talk a little bit about that here. And the idea, if we go in, just take a look at SPY, and let's put it on a 1 week chart. Right? If you look at the weekly candle, it actually looks great because we had this big gap down, then we've been rallying all week, and we're at all-time highs right now. If you kind of look at a line chart, we haven't really done anything. And the reason for that is because a line chart is just close to close. So this was last week's close. This, so far, I'm recording this Friday morning, is this week's close. So net close by close basis, there hasn't been much movement, but we've had a big gap down and then we recovered that gap. I think that's certainly bullish in the short run. But what we want to look at is, are we going to be choppy, and which of the systems that make up our swing trading systems that you can find here at StatsEdge, along with the free courses and all of that, which of these systems is going to potentially perform the best if I'm right and some choppy action is coming? So first chart I want to look at, and again, shout out Nautilus Investment Research. I took this chart from them, so they definitely deserve those props. This is the election cycle, right? This is what happens is every 4 years down there in the States, you guys elect a president. Then 2 years later, it seems like it's like lawmakers, and we would call them parliamentarians, but I think you call them senators or something like that. So every 2 years is an election cycle. And if you look at it, this is, black line is the average S&P 500 return for these 4 years, right? So this is generally what happens in the market on average for a post-election year. Right, a little bit of a dip. Our dip was obviously way worse than this one, and then rally into the end of the year. And then you get this sideways kind of choppy action, some up years, some down years, but net a choppy market until the next election, where you have this nice surge higher, and then so on and so forth. So it seems to be the pattern of, as the election kind of comes up, then you start to get periods in which you have this sideways choppy action, because they don't know necessarily who's going to win. Polls may say first it's this team, then it's that team, then it's this guy, then it's that guy. And then they're just trying to figure out which potential team is going to win before they then take their bets on which sectors could be, an idea behind that. Now, this one here is the same chart, but using the VIX. So volatility, how volatile is it in most seasons? Well, you can see this is 2025, and here's a potential massive volatility spike ahead. This is average election year, post-election, mid, and pre-election year. So we are right here on this red line, and it's a potential for a large amount of volatility coming up in the near future. Lastly, right here is September. This bar chart is what is the percentage that the market is up this year. It's only February and September that are more likely to be down than they are to be up. And then last but not least, we are seeing a little bit of RSI divergence here in the SPY, just showing that this push higher here is just a little bit more of a grind. That's what an RSI means. It doesn't necessarily mean a top is coming in or anything like that. It just means that there's less oomph in this particular push than there has been in the prior pushes before that, right? These don't necessarily revolve down, but just painting a picture of potentially some choppy action, right? And choppy action might be up for a couple weeks and then down for a couple weeks and up for a couple weeks and back and forth and back and forth. But that potential of choppy action, I think, is certainly there. And then again, something that we could have to deal with. So what do we do in that case? Well, this is the beauty of trading multiple systems, is we have a momentum system that, DHI is what I brought you guys on. DHI is what I brought you guys on Monday, right here on this purple line. And from there, if you had followed this particular pick, you're up 6%. That's a great little idea. That's a momentum trade. That's something that we're buying as it's potentially moving higher. When it comes to different ideas, right, we are looking for things like pullbacks on like MEOH, right? This is something that could potentially have a nice little pullback into a zone like this. Snow, for example, is another good one here. So this is one from our pullback setup. This had a great push this week, pulled back yesterday, and we got triggered here at 220. It's currently at 223. This is why I pay so close attention to the market, because you can just kind of imagine that if you are in a choppy environment and a high volatility choppy environment, buying breakouts like DHI might not be the best trading strategies that are out there at that time. It might be more something like Snow, where you're waiting for the stocks to pull lower, you're buying them there, you're playing the volatility as opposed to, chasing breakouts and getting stopped out and chasing breakouts and getting stopped out. So if I'm right and we're going to enter this period of high volatility, it doesn't mean I'm going to stop trading the momentum strategies, but it just means of these particular strategies, I'm going to focus on the mean reversion and then the pullback strategy, and you can see kind of the statistics behind them here. The other thing that I see people do, and this is entirely up to you, is what they'll do is they'll just become more of a day trader. When volatility is very high, swing trading becomes not only a little bit more risky and maybe a little bit harder, but because you're having larger daily moves, then day trading may actually become a little bit more profitable. The kind of day trading we do, where we're doing a lot of mean reversion, we're bidding up here and we're selling down here. We're trying to catch kind of the extremes of the markets with a slight edge and then do that edge multiple times a day. Right? So there's a lot of what ifs here. First of all, I and the seasonality could be dead wrong. It could be one of those scenarios in which the seasonality this year does not hold true and we just rip into the end of the year. That's fine, right? We have systems that will work for that, especially our investment systems. There's a period of time where, again, I'm wrong and the market just tanks all year, right? So we're just trying to get somewhat of a better understanding of what playground, what sandbox we're potentially playing in, so we can lean a little bit more on one system versus the other. This is why I always recommend people look for multiple strategies, multiple systems to trade. You never know for sure which one's going to be working that day or week or month or year. So multiple systems ends up helping kind of smooth that return. But if I'm right and we are entering a period of potential chop, I'm going to be glad to have some mean reverting setups. So I hope this helped. I hope you like this kind of content. If you do, again, comment down below. The algorithms really like that. Share it, all that annoying stuff that YouTubers tell you to do. And until Monday, get away from the screens.